Hello everyone, I am Dr. Vincent Zahiraj, Assistant Professor, Postgraduate and Research Department of Economics, Sacred Heart College Autonomous, Tirupattur. Today we are going to talk about money, characteristics and evaluation. The agenda is the introduction of money, characteristics of money and evaluation of money. First, introduction. What is money? Money is the earliest days of civilization. Goods were exchanged for goods. Money in the beginning was in the form of commodities. In a later period, precious metals were used as money because of the inherent difficulties of metallic money. Paper money was evolved. The definition by the Crowther, he defined as anything that is generally acceptable as a means of money exchange, that is, as a means of settling debts, and that at the same time acts as a measure and as a store of value. Even though this money was defined by Stanley Withers, money is what money does. The characteristics of money. Now we go for and find out the characteristics of money. The first one is durability. It is when an item is able to withstand all the hardships and it is still able to maintain to be undamaged and unusable after a long term of usage. Durability is crucial for money to be able to perform the following functions of medium of exchange and store of value. The second characteristic is portability, which also serves as a medium of exchange, means that money can be movable from place to place to be used as monetary transaction to be exchanged for goods and services. In modern days, money is carried from one location to another without needing much efforts, as all types of money such as cash notes, coins and cards are carried easily in a wallet. The third thing is divisibility. It is a characteristic which means that money can be divided into small units and that it can be used in exchange of goods and services. As to function as the medium of exchange, as it is divisible, it can be used to purchase all kinds of goods with different values. As money functions as the medium of exchange, it must have denominations to be traded for all goods and services and everything in between. The fourth characteristic, uniformity, means that all types of the same denomination of money must consist of purchasing power. It is a characteristic of perform the function to standard of deferred payments. The fifth characteristic is limited supply. It is a characteristic which helps in storing the value of money, means that constraints on the amount of money in the monetary circulation ensure that values remains constant for the currency. Currently, most of the respective countries' government has the responsibility to control an adequate money supply based on market with their monetary policies, such as explanatory monetary policy and contradictory monetary policy. The next characteristic, acceptability, supports the function of medium of exchange. The essential quality of money is that it must act as an item being acceptable to all without having any hesitation in the exchange of goods and services. Acceptability means that everyone must be able to accept the money for transactions. Money is universally accepted around the world as a universal mean of transactions. The next one is non counterfeit. Ability which functions as the store of value means that money cannot be easily duplicated. As money cannot be easily duplicated, it prevents the unrestricted and illegal creation of duplication of money. Besides, preventing the duplication of money to happen is one of the main reasons of government existence. Yes, now we are going to talk about the evolution of money. The first thing, there is money starts from the commodity money. Money is a very old convenience since it is generally accepted as a medium of exchange. In the earlier days of human civilization, commodities were commonly used as money. During the World War II, the British and German prisoners of war camp used cigarettes almost themselves as a medium of exchange rather by conscience and not by the fate of the government. Anyway, cigarettes could not be thought of as money in the true sense because of its certain inherent characters. At that time, it acted as a crude form of money, but the commodity money had no general acceptability since it circulated as money in a particular locality. Then it will be converted as a metallic money. Three metals, silver, copper, and gold, were used for the purpose of the exchange. Of all the commodities, metals provided its great advantages. More or less, all the attributes of good money, example stability of value, divisibility, cognoscibility, acceptability, etc., were to be found in money metals. But metallic money had some inherent defects. So we switch over to the next evolution as paper money. After coinage, the next stage in the development of money was paper money. Metallic money made of precious metals suffers from the disadvantages of being stolen easily. It is both dangerous and inconvenient to carry precious metals from one place to another. European merchants and people kept their gold and silver with goldsmiths for safe custody. The receipts that the goldsmiths issued were perhaps the first form of paper money. Paper money helped the process of transaction easily. Later on, the issues of paper money was left into the hands of the commercial banks. Nowadays, the central bank of a country has been given monopoly power to issue paper notes, currencies. Then we switch over the evolution of money into the credit money. Another type of money in the modern world is credit money or bank money, like checks, drafts, promissory notes, etc. It is difficult to imagine a modern economy without credit. Larger transactions over the entire country as well as outside the country are credit transactions. With the increase in economic activity, the need for an ever increasing supply of money is felt. In fact, economic transactions have become easier and smooth with the use of credit money or bank money, so that paper currency running to lakhs on crores of rupees for transaction purposes need not be used. Since checks and drafts can be sent safely in any part of the world, these are considered to be superior to paper notes. Finally, it was converted as an electronic money or also called as an e-money. In this age of computer technology, we have entered a new stage of evolution of the payment system with the advent of electronic money. E-money is a money that is stored electronically. That means checks are put in the email, its importance form or credit cards, debit cards, and electronic checks. Former enabled people to purchase goods by electronically transferring money directly from their accounts to the seller's account. Electronic checks allow internet users to pay their payments directly over the internet without having to send a paper check. All these suggest that we are heading towards near cashless society, digitalization. Thank you.